Hey, I hope you and your families are doing well. I was out on a walk a couple of days ago and I thought to myself, if I was to learn to trade again, what would I do? What would be the steps? What would be the process that I would follow that I think could most efficiently get my knowledge and skills to where they need to be? So that's what this video is going to try and do. It's going to try and answer that question for the logical steps and processes that I would follow if you're learning to trade and you want to improve both your knowledge, but also specifically your skill set as well. So I really hope you guys are going to enjoy this video. Market Surge are today's video sponsor. If you're interested in a discounted trial, then there is a link in the comment section and the description below. So I'm going to take you through the 5 steps, but it's important that we make the distinction between having knowledge on a subject and being skilled in that subject. Okay, there is a difference between knowledge and skill. Ideally, as traders, we want to have a very high knowledge base, but we also want to have a very high skill set. So as we work through these 5 steps, you'll see the first couple are focused on building your knowledge, and then as we get into the latter steps, it's focused on building your skill. So where I think a lot of people go wrong, initially it's really good because they're trying to learn, get more knowledge, but they forget about the skill set side of things. So they build up a lot of knowledge, but have very low skill levels. And the skill levels are very specific for trading. So it's skill in terms of identifying, in terms of controlling, in terms of risk mitigation, in terms of optimizing profits. So we're going to build up your knowledge. This is what I would do to build up your knowledge. And then I'm going to take you through how to build up your skill set. So hopefully this video will be really kind of interesting for you, and it's not going to give you all the answers. For me, it's about trying to lead you on a path, on a journey where you go and make the discoveries for yourself. There is a lot of work involved for you. Okay, I can try and help and guide you with some of these YouTube videos, but it's really about you doing the work and making the discoveries for yourself, learning about you as a person, as a trader, and really growing your knowledge and growing your skills. So this is what I would do. Okay, if I was to go back and say, hey, Jack, read these 24 books, okay? 12 on trading, 12 on non-related trading. These are the 12 that I would read, and I would read them in this order. So in terms of the trading books here, what I'm trying to do is build up your knowledge. I'm assuming, like me over 10 years ago, you have no knowledge. You know nothing. This is what I do. There are loads and loads of books which are utterly useless and utterly pointless, and I've read the vast majority of them. So these are the 12 that I would read that I think help improve your knowledge base. So I'm not going to read all of these out to you, but I would read these ones and I'd read these in your area in this order. This I think will give you a good knowledge. I would also, additional reading, try and read everything by William O'Neill, by Richard Wyckoff, by Nicholas Darvis, and if you want some nice story stocks as well, Jack Schwager, the Market Wizards books I think are good. I would also read these ones over here. Now these are not specifically related to trading, but I found them very useful for me in terms of my overall growth as a person and overall growth as a trader as well. Because what you will find is when you start building up your knowledge base and you start building up your skill set, you'll realize the defining thing is you. So a lot of these books are linked to psychology and understanding more about you, your own performance, things that make you tick. Okay, trading really is, I think, a journey of self-discovery into yourself, and you start to build your process out. So you start building your knowledge, you build your skill set up a little bit, and then you start trading. You're like, okay, well, I identify these type of setups in terms of your trading plan. You're like, I identify these kind of setups. I control the risk like this. I mitigate the risk like this. These are the selling rules, selling guidelines that I use. And then it's like the Mike Tyson quote. Everyone has a game plan till they get punched in the face. And then the market punches you right in the face, gives you a left hook right to the face, right to the nose. And then all of a sudden, you're not identifying the type of setups as per your trading plan. You chuck your stop loss out. You're then not following your selling rules and your selling guidelines. Okay, you're supposed to try and hold this stock until it closes below X moving average. And suddenly you're up 5% and you're like, oh, I'm taking it, booking a profit. You can't go broke taking profits. Like your whole trading plan just goes out of the window. Why do you do that? Now this is where you're going to go deep down the Alice in Wonderland rabbit hole, and you're going to learn a lot about yourself. There may be things that you have just kind of like buried down there and you're like, you don't want to look at them. A lot of it can link back to like childhood stuff. And you got to go there. I think you have to go there. There are a lot of demons that will show up in your trading. And your demons are going to be very different to my demons, and they're going to be very different to John's demons and Bob's demons and Simon's demons. But we all have those demons. We all have those little gremlins that show up in our trading. If we're not following our process, why are we not following our process? It should be really simple. If we're not adhering to our stop losses, why are we not adhering to our stop losses? If our intention is to hold the stock until it closes below this moving average and we snatch at a short-term gain, why are we doing that? You know what I mean? So it's about getting the knowledge of trading. It's about bringing your skill set up. And then what encompasses that is you and your brain. And then you start finding stuff out about yourself and you're like, why am I doing that? Why am I not following that? Why am I not disciplined? Why can I not do that? And then also with your trading plan, as you start bringing your knowledge up, I realize I'm not even talking much about the books here, but as you start, because the psychology side of things is really important, as you start bringing your knowledge up and as you start building your skill set up, you will start creating a plan, okay? And you will start going, okay, I identify this, I do this, I do this, I do this. That's all in theory. And then you get into the actual trading of things. And you're like, yeah, I could hold a stock until it closes below its 50-day moving average. And then you realize, well, this stock has now got extended from the 50-day by 20%, 30%, 40%. Can you really hold that stock back for a 5-6 week pullback 30%? And then if it closes below the 50-day, will you then sell it? So you may create these kind of grandiose ideas in terms of your trading plan that, yeah, I'm going to do this, I'm going to do this. And then you actually trade that way and you're like, I can't do that. Well, why can't you do that? So it's also about building the knowledge, building a skill set, and building a trading plan that works for you. You are you. I am me. You can't do what I do. I can't do what you do. We're all different. We're all wired differently. So this is why I think it's about knowledge, okay, knowledge and skill, both in terms of trading, but also in psychology, which is really just understanding your stuff. What makes you tick? Why do you do what you do when you do it? But I find that absolutely fascinating. So I would read these 24 books, and then I would try and get your hands on all of these books by O'Neill, by Wyckoff, by Darvis, and the Market Wizards book. I think you'll find them quite useful. Let's go into this. So then what I would do, now we start going slightly transitioning from knowledge into skill set, but we're still really building up the knowledge here, okay? So first couple of steps, remember, we want to make the distinction between knowledge and skill. So we're still trying to bring up your knowledge here, okay? I'm assuming like you've never looked at a stock chart before. So guess what? You've got to start looking at the stock charts, right? You actually got to go, how the heck does a stock go from point A to point B? And then how does it go from point B to point C? Like, how does it move? How does it base? How does it trend? How does it top? How does it go back down? So something that's really, really useful, and I'm going to give you a list of 75, 50 stocks and 25 ETFs to study. Study them all. Study them all on the daily charts. Study them all on the weekly charts. See what discoveries you make for yourself. Again, have that knowledge base of the books, so you have a good kind of foundational knowledge base, and then start looking at the charts for yourself. Okay, not what someone on this is saying, or that saying, or that saying, or what I'm saying, or what do you see? Like, what do you see? I try and make it quite clear in these YouTube videos what I see, but what do you see? That's what matters. What do you see? Because when you start to see things, it feeds into your process. Okay, you'll start to see things and you'll be like, that's interesting. How does that stock go from point A to point B? Can I build a process around that? And your process is focused around 4 components: identify, control, mitigate, and optimize. All processes are. Whether you're an intraday scalper, a day trader, swing trader, position trader, you identify, you control, you mitigate, and you optimize. Now, some people choose not to do those. Some people do them really well, some people do them absolutely terribly. And that's the skill set side of things. So if you look at this here, what you'll see by studying a whole bunch of stocks is you go, wow, quite similar things keep occurring. Now, I try and tell you in a lot of these YouTube videos what I see, so I don't want to spend a lot of time on this, okay? It's for you to do this study. I've already told you in like over, I don't know, there's like thousands of hours on this YouTube channel. Maybe not thousands, but there's a lot of hours, right? Of this. Like, what do you see? And do you not find it interesting that we have Novavax on the daily chart on the top, and then we have MBOT on the 5-minute chart below? And do you not find that interesting? Does the pattern not look eerily similar? But yet, one is a COVID-related stock in 2020 on a daily chart, and then this one here is on a 5-minute chart 3 years later. Do they not look a little bit similar? And this is the point. But the point is, you make the discovery. Okay, it's great. Okay, you go and read the O'Neill books, you learn about cup and handles, you read the Minabini books, you learn about VCP, you read about this book, and you get a good knowledge base. You're like, okay, I now have a broad understanding of the type of things that I am looking for. And now it is for you to start looking for them and make your own discoveries. Okay, when you start reading all of the greats out there, you'll realize that they're all pretty much trying to do the same thing. Okay, they're all trying roughly to do the same thing, but they all do it a little bit differently. Everyone does it a little bit differently. It's the Bruce Lee quote: absorb what is useful, reject what is useless, and add what is essentially your own. When you're adding what is essentially your own, you're adding your own knowledge, you're adding your own skill, you're adding your own flavor to it. And this is the thing, it's about you discovering yourself as a trader, going along that journey and being, okay, yeah, and you'll find things will resonate with you. You may hear me say some stuff, or you read some stuff in a book, or you read this or that, and you're like, wow, I absolutely love that. You may hear another thing which a trader thinks, this is really important for me, and you're like, I think that's utterly useless. And that's absolutely fine. No one's going to take offense at it. It's fine. But you will start discovering these things for yourself, and you'll just see there's a lot of eerily similar things. So I'd really study weekly and daily charts if you're a swing trader, that is. And what you may discover, and this is covered pretty extensively in Stan Weinstein's book, Secrets for Profiting in Bull or Bear Markets, is the price cycle, or as he calls it, stage analysis. So Richard Wyckoff, man, was an absolute genius. Read everything you possibly can. Studies and Tape Reading, brilliant book. It won't tell you so much how to trade, but it will help you in terms of how to think as a trader. Okay, how to think as a trader, which is really, really, really important. You've got to change your identity here as well. You've got to change your identity to being a trader. I love F1, and I'm going off on a couple of topics, but hopefully it's useful, right? You ever heard Jensen Button? He's often on Sky Sports F1. Okay, and he talks about them when they are analysing certain things from the race or certain things from qualifying. You'll hear him say, they're a racing driver. That's what racing drivers do. They are a racing driver. They do racing driver things. So when he's talking to some of the other pundits on Sky Sports F1, they aren't racing drivers. They don't see it from a racing driver perspective. And they're like, why did Max do that? Why did Lewis do that? Why did Charles do that? And Jensen's like, they're a racing driver. That's what a racing driver does. They see a gap, they go for it. I don't care. They see a gap, they go for it. And as soon as they don't, they're no longer a racing driver. They're not thinking like a racing driver. So you've got to start developing this mindset as a trader. Be a trader, become a trader, identify as a trader. What would a trader do? You can sometimes ask yourself the question, what would Davis do? What would Wyckoff do? What would Livermore do? What would O'Neill do? What would this guy and this guy do? Like, it's a useful exercise to start thinking like them. So again, a lot of it is knowledge in terms of trading, but knowledge in terms of psychology and then skill set in both of those areas are really important. And what you may find from studying the list of stocks and ETFs that I'm about to provide you is you may notice this, that there are 4 quite distinct phases of a price cycle, which is phase 1 accumulation, phase 2 uptrend, phase 3 distribution top, and phase 4 downtrend. Now this is very, very key to understand, because when you see this with your own eyes, it's great. Like, I can show you this chart here and I'm like, phase 1, phase 2, phase 3, phase 4, right? You then got to decide on your process. Remember, there's 4 parts to every single trade, guys, right? I don't care if you're an intraday scalper or a swing trader or a position trader. There's 4 parts to a trade. And the first part is, how do you identify a high quality setup? And the key emphasis, how do you identify a high quality setup? And when you're going through that, how do you identify a high quality setup? Where are you identifying it in terms of the price cycle of the financial instrument, of the stock in this instance here? Okay, if you're swing trading on the long side, you probably don't want to be buying it in a phase 4 downtrend. You probably want to be over here in a phase 2 uptrend, right? Make sense? So it's about the identification, but this is the bedrock, like the price cycle, stage analysis, for me, the bedrock. You may discover something else. That's absolutely fine. But here's what you then want to do, okay? Now we're going a little bit more granular. Okay, now we're going to zoom in and I'm going to give you the list of stocks in a couple of seconds. I'm going to give you this list, okay? But a really useful exercise for you to do is this. How do stocks move from point A, okay, point A to point B? Meaning, how do they trend? Think about this, okay? How and why did NIO, okay, Chinese EV stock, electric vehicle stock, how did it go from $1 to $55 in 15 months? That's that point A here, where it was about $1 to here, about $55. How did it do it? Why did it do it? So the how, you look at a chart. Like, how did it go from there to there? Then repeat this exercise for hundreds and thousands of different stocks, asking yourself the question, what are the repeatable characteristics I see? NIO also then went down over the next 3 years, down 94%. From the top here to April 2024, roughly 94% decline. So how did it then go back down to here? Not quite that fast, but some stocks do that fast. But how did it then go to there? So this is where you start building your process around it. But your process is built around reality. How do the stocks go from point A to point B? What do you see? What do you notice? Now I try and teach you in these videos what I see, what I notice. Okay, 10-day, 21-day, the 50-day. Okay, are there certain bases that you see form time and time again? Are there certain candlesticks that tend to occur around certain moving averages? Do you see what I call shakeout demand tails, gap down reverse bars, trigger bars? Whether they bounce, what do change of characters look like? What happens when it then starts making lower lows, lower highs, lower lows, lower highs, rolling over? What does this mean when you suddenly have a big increase in relative strength and then a big deterioration in relative strength? What does all that mean? What does it mean when there's a positive earnings reaction? What does it mean when the stock goes here? Phase 1, phase 2, phase 3, phase 4. And what you want to do is, the book that I put in the specifically not related to trading but are really, really useful, the #1 book was Peak by Anders Ericsson, which is all about building mental representations. Okay, read the book. It's a life-changing book, honestly. Like, changed my life completely. Well, maybe not completely, but changed my life significantly. Like, #1 book. Like, must read, right? And it's about building mental representations. Okay, so you look at NEO that goes from $1 to $55, and then go study 100 other stocks that go from the proverbial $1 to $55, i.e. they go up hundreds of percent, thousands of percent. What do you notice? Like, what are common characteristics that you see? How do you start building a process around that? It's really important. Like, this is really important stuff. I would spend a lot of time on that. It will take a lot of time. Like, don't just think you're going to open the trading account and it's yippee-ki-yay and you're off to the races. It doesn't really work like that. So let's go on to the next one. And then you want to start getting into the nuances, right? Because when you're studying this here, you're like, okay, Tesla. So phase 1 type base, phase 2 uptrend, and then this here is a phase 3 distributional top. But if you look here, we've got an earnings catalyst. Okay, look at the big volume on the earnings. We can call this A. And then over here, we can call this B. So why does one, and I'm not going to give you the answer, I'm going to let you go find the answer. Why is one earnings reaction the catalyst for a major advance and the other a climactic top? Context, context, context. Why is this one the catalyst for a major uptrend and this one here is a climactic top? Well, both have good earnings reactions, both occur on high relative volume, both are the relative strength line is turning up. Why is one really bullish and one is actually very bearish? That's the context, that's the nuance. You've got to understand where you are in the price cycle. It's the bedrock, the foundation. Where are you in the price cycle? Where is the stock? Where is the ETF? Where is the financial instrument in the price cycle? So it's not just what's happening, it's where it's happening. And the only way that you will get a feel for that, I think, is by studying. So here is a list of 75 financial instruments. There's 50 stocks, okay, which are going to be this list here, and I would work through them in this order. Look at them on the daily chart, look at them on the weekly chart. Take print screens. Take a print screen, print them off, whatever you want to do. Mark them up with a pencil and a pen if you want to print them off. If that's how you learn better, we all learn differently. But go through these ones and look at when they had major runs. When the stock goes from point A to point B, and it then goes up 100%, 1000%. And just ask yourself the simple question, but there's a very detailed answer to it. So it is a simple question, but there is a very detailed answer. What do you notice tends to keep happening? And you'll see different things to me. You'll see different things to Bob, Joe, Suzanne, Clive. You'll see different things. And by seeing those different things is how you start to build out your process. Okay, I keep seeing this. Where do you keep seeing this? Does it happen around a certain moving averages? Has the volume just popped up? Has there been a good earnings reaction? What's the relative strength line doing? Where is the stock in terms of the price cycle? Do you see repeatable patterns? Flags, wedges, pennants, cup and handles, VCPs, ascending triangles, channels, all of that stuff. Do you see that? Do you not see that? Maybe you'll make new discoveries. And then what I'd also do, I think it's worth also studying this here. 25 different ETFs. So you've got the major ones, you've got the SPY, you've got the SPYs and the Qs, you've got SMH, one of the main semiconductor ETFs, and then you've got some of these things here. So what you'll then start realizing is, that's interesting. Different financial instruments move differently. They wiggle and jiggle a little bit differently. So XLE, which is basically the main oil and gas ETF, moves differently to GLD, which is a gold proxy, which moves differently to TOT, which moves differently to TAM, which is a solar ETF, which moves differently to IGV, which is a software ETF. So this is where you start to build mental representations. What you start to notice is different things move differently. Different stocks have different characters. Different ETFs have different characters. So what you'll notice is NEO, which is what we were just looking at a couple of slides ago, NEO moves very differently to Google. But Google and Apple may move in a similar fashion, but they could move very differently to Tesla. And Tesla can move very differently to, let's say, ExxonMobil, which is a commodity stock, oil and gas related stock, which can move very differently to Celsius. And what you may notice is Qualcomm, 25 years ago, moves very differently to how it does now. Well, why does it do that? It's become more mature in terms of its kind of growth cycle. And then what you'll see is you'll have some thematic stocks, such as cannabis stocks like CGC, and say the crypto miners like a Marathon and also a Riot. They move very differently to, say, Ford and to Boeing. And what you then may notice is GME, which when it went on a mega run had a short interest, I think on the 21st of January or 22nd of January 2021 of 140%. 140% of the shares outstanding, the float was sold short. What does that mean? What could that create? So there are a lot of nuances, and you will see different things move differently. And no one can teach you that. You can only learn that for yourself. I can tell you, like, these are going to move differently, but until you see it, until you feel it, until you experience it, you won't know it, if that makes sense. You won't intuitively understand it, okay? You got to do this. You got to experience it firsthand. A lot of this, you can't learn to swim reading a book. Okay, you can get an idea. Okay, you can't learn to, you're not going to get better at golf reading a book. You're just not. You're not going to get better at golf watching 50 hours of Tiger Woods hitting a golf ball. Your knowledge may go up in terms of how does Tiger play the course, how does he see that shot, but your skill set, remember, we made the distinction between knowledge and between skill set. Your skill set watching 50 hours of Tiger Woods strike a ball is not going to improve, i.e. your handicap is not going to get lower. So we've got to make the distinction between knowledge and skill. So you want to learn new things, but then you want to practice them in a very, very deliberate manner. And this is very deliberate. These lists of stocks, I really thought about these lists of stocks. This will give you, I think, a good understanding of a lot of different stocks, a lot of different financial instruments, a lot of different ETFs, the type of ETFs, and how they move. And what do you see? It's going to be an important journey. It's interesting. Let's clear all this. Go on to the next one. So, then what you may want to study, because I'm assuming that you're pretty green, right? You're like, I don't know, never looked at a stock chart before. What you'll start seeing is, well, if you look at the candlesticks on a stock chart and you were studying daily and weekly charts, you may be like, okay, I see this happen. Sometimes there's a red bar, sometimes there's a green bar, sometimes they look like that, sometimes they look like that, sometimes there's big volume, sometimes there's not big volume. And then what you realize is those candlesticks are created by different market operators. Large institutions, individual traders, algos, but what you realize is those candlesticks are buying and selling. So in essence, they are psychology. They are what is going on. They are demand and supply and demand, buying and selling, accumulation, distribution. And then what you start to realize is as much as patterns repeat, certain candlesticks repeat, and certain candlesticks repeat at certain areas before certain things happen. Context, context, context. So a useful study may be this book, Thomas Boswells, Encyclopedia of Candlestick Charts, and learning about these different Japanese candlesticks, and then starting to build your process. Okay, so we are going, remember, we're still here, we're in the knowledge phase. We're not even in the skill phase yet. We're just building up that knowledge. I think this is a prerequisite. The things I'm trying to explain right now, I think are a prerequisite to starting to build up your skill. You've got to have a slight idea of what it is you're trying to do first, right? And then we start building the skill. So these ones here, these are what I call trigger bars. Then you have shakeout demand tails, which can be a sign of accumulation, absorption of supply if they occur in the correct context. So then you start to learn about reversal rates. You're like, okay, that's a Curie line, 20,000 database inputs. Thomas Boswells tested 4.7 million different Japanese candlestick combinations, 20,000 database inputs for two Curie lines, bull market and bear market reversal rate, 66% and 63%. Okay, interesting. That kind of stuff's interesting, is it not? Go on to the next one. These are what I call gap down reversals. So belt hold bullish has a bull market reversal rate of 71% and the same in a bear market reversal rate. And there were 14,542 database inputs. Statistically significant. And what if you can find this candlestick occurring in a common continuation type base off of the 21-day EMA and the stock showing a lot of relative strength, and it has triple-digit earnings, triple-digit sales, mega estimates coming through new revolutionary technology such as AI. Is there something there? This is the Alice in Wonderland rabbit hole. This is where you will start going down. But hopefully this video is a bit of a useful guide in terms of keeping you on the path and saying, I think this is a pretty good path, but you've got to walk the path by yourself, okay? Then this can be variations of candlesticks. So why, if you saw variation number 1, shake out demand tail, then double inside candlesticks in a leading stock around the 21-day EMA or the 50-day SMA, simple period moving average, why would this be potentially really, really good behavior to see? That's what you're going to learn about. But again, you've got to study it, you've got to see it for yourself. Then we go into number 3. So now what we're doing is we're starting to transition from knowledge into skill. Okay? We're still heavily in knowledge here, but we're transitioning now into skill. What you start doing is building a process around what I just call ICMO. Identify, control, mitigate, and optimize. So whether you are an intraday scalper, a day trader, a swing trader, position trader, ABC trader, XYZ trader, I don't care. There's 4 components to a trade. Number 1, you identify a setup. Okay, that's the starting place, is it not? You identify a setup. Number 2 is how do you control risk? If you don't control risk, why do you not control risk? Still a component to a trade, whether you do it or not. Number 3, once you've identified it, controlled it, so you're in the trade, then do you mitigate risk? Do you mitigate risk? Do you not mitigate risk? If you do mitigate risk, how do you mitigate risk? If you don't mitigate risk, why are you not mitigating risk? You should know the answers to these questions. And then number 4 is optimize. What are the selling rules, selling guidelines that you are using to optimize profits, both in terms of monetary gain and efficiency of the monetary gain? You're going to sell at some point, are you not? I'm assuming you're not a bag holder and you're just going to hold this thing for 50 years. Personally, I don't think that's a very good idea. Maybe like the Qs and the SPYs, and it's kind of a long-term investing account, but stocks, I don't know. I don't think so. Livermore spoke about that over 100 years ago. I was talking about the railways and things like that. Things change. So if you're going to sell, why would you not optimize it in terms of monetary gain, efficiency of the monetary gain? And then if you have a plan and then you don't follow your plan, why did you not follow your plan? That's why we start going into the psychology side of things. So these are the questions to ask yourself and help develop your process. How do you identify a high quality setup? Notice that the emphasis is on you. How do you do this? You have to take ownership of it. Okay, if you just want your hand being held, I don't think it's going to end that well. You have to take ownership of it. How do you identify a high quality setup? How do you control risk to create asymmetric risk to reward trading opportunities? How do you mitigate risk to be risk free on the position? What are the selling rules, selling guidelines you'll use to optimize profits, both in terms of monetary gain and efficiency of the monetary gain, also known as time value? Furthermore, how do these adapt to the character of the stock? As I mentioned, different stocks move differently. So you can have a plan in terms of, okay, this is how I identify, control, I mitigate, I optimize, but how you do that for, let's say, a software AI related stock with a 20-day average daily range percentage of 8% is going to be different to how you may trade ExxonMobil, which is a big oil and gas stock that has a 20-day ADR percentage of likely less than 2%. So this is where you adapt. Charles Darwin, it's not the strongest species that survives, it's the one that can adapt best to a changing environment. How do you adapt to change? Like, what is the rate of change in which you can adapt? That then links to your psychology and developing a Bayesian mentality. You update as new information becomes available. You're not rigid, you're not dogmatic, you don't dig your feet in. Something's not working, change it. Think about it. Was it me? Was it the market? Did I do something wrong? Did I do this? Did I do that? Did I miss something? Was I trying to trade a software AI stock? Like I would trade an oil and gas stock? What were you doing? Why were you doing it? Skill set. Next part. So what have we done? We've gone, basically, read books, get foundational knowledge, look at a load of charts to get a feel for how do these things move, start to build out your process in terms of from what you saw, what your knowledge, what you saw on the charts, okay? Start building out your process. How do you identify it, control it, mitigate it, optimize it? And then we start really working on your skill set. And this is the part less than 1% of people do. Probably less than 1% of people do. Practice in a deliberate manner. In any other skill-based activity, you would realize the importance of practice. If you're a golfer and you want to get better at golf, what do? You go to the driving range, you potentially get a lesson, okay, and you start working on specific things. Wow, I keep slicing my 7-iron. Why do you keep slicing your 7-iron? There's inputs and outputs, like you're trading. There are inputs that you're putting in. So the inputs are identify, control, mitigate, and optimize. They're the inputs. Okay, it's just systems. You want to think in terms of systems and routines. They're the inputs. That is going to determine your outputs. And over a large series of trades, you want to think about it. Anything can happen on any one trade, but you want to think over a large series of trades. So in terms of golf, it's quite clear. Well, if I keep slicing my 7-iron, there's probably an input that I'm doing wrong. Well, that's really wrong, it's just feedback, that I could change. So if I change the input, I may be able to change the output, being I stop slicing my 7-iron and get a nice little draw on it. So you want to think in terms of inputs and outputs. So we then do that in terms of building up your skill. So with that 7-iron analogy there, what we're doing is we're thinking about the inputs that are creating the slice, and then we want to change things from the input level. Okay? You don't want to just stare over here at the output and think, oh, if I just meditate on it and I visualize it and my slice will magically... I don't think so. I don't think so. What we want to do is think systems, we want to think inputs, we want to think outputs. And specifically, we want to think about inputs from an identify standpoint. What are the inputs you're putting into identifying trades? What are the inputs you're putting into controlling risk? Inputs for risk mitigation, inputs for optimizing profits, selling rules, selling guidelines. What are the inputs? Tell me your inputs, and then let's go take a look at your outputs over a large series of trades. 25 trades, 50 trades, 100 trades, 1,000 trades. Okay, can we then go in and tweak things from a systems level? Do we need to tweak something in terms of your controlling risk? Do we need to tweak something in terms of the risk mitigation? In terms of the identifying? In terms of the selling rules, selling guidelines that you're following? Can we start tweaking things from an inputs level and then change the outputs? Or is it just an absolute pants market environment? You're doing everything right, but the market environment's just not there. And you just got to chill out and go, okay, it's just not the market. So trading consistently well over months, years, decades, lots and lots of trades, requires knowledge and skill, as I'm trying to cover in this YouTube video. Knowledge can be learned and skills can be improved. The best way to improve skill is by deliberate practice. This book here, just read this book. Listen to it on audio, get it on Amazon. Read this book, guys. Read this book. Inadvertently, best parenting book I've ever read. It's not about parenting, but for me, I think it's the best parenting book I've ever read. Identifying great setups is a skill. Controlling risk is a skill. Mitigating risk is a skill. Following selling rules / guidelines is a skill. You got it. Following them is a skill. Adapting to new information is a skill. Discipline is a skill. Knowing when and how hard to push is a skill. The last one is the one I struggle with the most. I want to play. I want to play every day. It's just my nature. I like to push it. I like a challenge. I have to prove that I'm the best. Otherwise, I don't get my parents' love and affection. It goes back to a lot of childhood stuff. So what you'll find is as you start going through this journey, a lot of things may come up. But this here, deliberate practice, really, really important. And then what you do is you actually go into actual trading and analysing. So okay, if you have a really good month and you're up 23.49% in a month, what did you do well? What did you do? Well, there's certain things you were doing. And then you start thinking about things from an inputs level, okay, in the systems. When I had a really good month, what was I doing? Was it my mindset? Was I doing something differently? What were the type of trades that I was looking at? Okay, when you have a decent month, you're up 10%. Okay, what was I doing? Analyze it. Analyze the trades. Analyze yourself. Okay, what was I doing? When you have a bad month and you're down 5.34%, well, were you doing things wrong? Was I pushing too hard and the market wasn't there? The market that month was down 9.23%. The triple Q just got absolutely walloped. You can see it in the first 20 days of the month, I was obviously trying to push when the market wasn't there. And then I kind of realized, and then you can see it was then pretty flat. And then I kind of realized what I was doing. And I was like, I'm trying to push really, really hard here in a market that's just is just not giving it back to me. So I was able to realize, it took me 2/3 of the month to get there. But again, a lot of psychology things will come up. For me, if I wasn't perfect If I wasn't achieving, if I wasn't doing really well, I didn't get the love and affection that I wanted from my parents. So I had to be perfect, had to win, had to push, had to be the best. Otherwise I was useless. So it can take me a lot of time to like go, okay, hold off. I can't try and be perfect in this market. To be perfect in this market, I've got to actually ease off, which really goes against my inherent nature. I really struggle with that. So they are things that you're going to learn about yourself. Okay, when I've got gains in the portfolio of 194%, 145%, over 100%, count of that time is up 58%, just in terms of just these ones here, how much these trades have added. What am I doing well? What could I do better? We can always do things better as well. Okay, we go into a systems level. Okay, it's not fluke, it's not luck. It's a process. Systems, routines, inputs, outputs. What are you doing? What are you doing well? What could you do better? Okay, if you have some good gains in here, well, could they have been better? Could you have added to the position? Could you have been aggressive? If you're getting your ass handed to you down here, what are you doing? Why are you doing it? Well, the setup's still there and you're just kind of quote unquote unlucky and it's just lady luck variance playing out. So these are the things to really, really be studying. And then go and look at some trades. Like, go and look at your trades. So I put a significant emphasis on getting the big ones right. Get the big ones right. Okay? As Ed Dakota says in the Whipsaw song, one big trend pays for them all. You'll go through periods of time where you are extremely frustrated. Like, if you think you've been frustrated before, try trading. Expectations really, really matter. So my expectation when I'm trading is, it's kind of the 80-20 principle. 80% of the time, I'm going to be frustrated, I'm going to be annoyed, not going to be very happy, I'm going to be irritable. 20% of the time, I'll be quite happy. I'm a human being, I have emotions. When I'm trading well, I'm happier. When I'm not trading well, I'm not that happy. That's the way it goes. Show me someone that's happy losing and I'll show you a loser. Can't remember who said it, maybe it was Michael Jordan or something like that. But I think it's pretty true. There's a lot of truth in that statement. So for me, it's about trying to get these bigger ones right. Understanding that 20% of the time, the market will probably be pretty darn good for my style of trading, which is intermediate term trend following. Maybe you'll create a different process. I'd encourage you to do that. 80% of the time, a bit of a chop, a bit of a grind, a bit of slow process, slow progress. I'm not expecting much. 80% of the time, I'm not expecting much. Go look at how Amazon, Nvidia, Apple, go look at the amount of time they spend in a drawdown. Even though they've gone up tens of thousands of percent, some hundreds of thousands of percent. Look at the length of times they spend in drawdowns. Like, you being in a drawdown is normal. Like, it's expected. Like, most of the time, you're not going to be at new highs. If you think you can just print money day after day after day, maybe you've got something to learn in terms of the real world of trading. It doesn't work like that. So my expectation, okay, and our expectations help create, like Buddhism, if you like. Okay, your unhappiness stems from your desires. We've got to change the expectations. This is why so much of it is psychology. 80% of the time, I just accept the fact I'm going to be a bit annoyed. 20% of the time, I'm expecting to be pretty darn chirpy, pretty happy. But then when these big trades come along, and oftentimes these big trades can come along when you've just gone for a period of you're not too happy. Oh, you're angry, frustrated, annoyed, pissed off, this happened, that happened, oh, I got chopped up in this stock, that stock, oh, I went, pulled back, got knocked out, break even. Then they come along. Okay, and then they come along. Now these trades to me, these are the ones to get right. These are the big boys. So if you look at Nvidia, I bought it right here. 27864. There it is. Free rolled it. So 1/3 of the position at 28964. Right there. Held into the earnings. Okay, because I had a gain greater than the implied volatility move. You'll learn all about that. 7.1%. And then what I like here is here. Sold a third, 394. There it is. Stock got extended from the 10-day EMA. Adjusted my stop loss. Lower the day, lower the day, lower the day. I got to stop that here, like on the open. Okay, but my stop loss was there. Lower the day. And then last one, 420. Okay, I was trying to hold some. First close below the 50. Put my stop loss, basically lower the day, and then I got knocked out there. Tried to give it every chance to turn around, recover. But then I look back and I think about, okay, that was one of the big trades. I also added to Nvidia in here as well. So I added. Okay, in here. Had I not added there, I could have added here. Could I have added there as well? So then I go back and I study them and go, okay, yeah, could I have added, could I have done this, could I have done that? Actually, when Nvidia kind of popped test and then went for the reversal, the third that I took off, could have added the third back in here. So I'm always looking back, I'm always analysing, going, okay, good trade, could have been better. Could have pushed it harder. Thinking there is a pretty good ad spot actually. Happy with my ad, coming through in here. Okay, through the high of this shakeout demand tail, look how the volume dries up on the pullback, look at all the 52-week highs, look at the 52-week highs in the base, a little bit post-base. Okay, pretty pleased with that. But these are the ones you then want to go back, study your winners, study your losers. Even when you go back and study your winner, you're like, okay, could have pushed it in there, could have then moved the stop loss up, like go back, like nerd out on it, go into the weeds. And really think about your systems and your routines. Okay, so I'll wrap the video up there, but hopefully it was useful for you. I'd really encourage you, like, work through those 5 steps. Like, work through those 5 steps and realize that there is knowledge and there is skill, and you want to have a high level of both. You don't want to just have one or the other. You want to have a high level of both and realize that the market is ever changing. Adapt or die. Like, realize that you may have to change. Things change, things move differently. QE, algos. What's happening in the market? Identify, control, mitigate, and optimize. Link everything back to systems and routines. What are you doing? What are your inputs? What are your inputs in the 4 components of a trade? What are then your outputs? Analyze it over a large series of trades. Okay, am I happy? Am I not? Am I not happy? Is it the market environment? Okay, is breadth in, breadth out? All of these different things. Go down that Alice in Wonderland rabbit hole. So this was going to be a short video, but it's turned into quite a long video. But hopefully you found it useful. I've really tried to go back in time and be like, okay, if I was to learn to trade again, what would I do? What would be the steps? What would be the processes? That is what I would follow. Those 5 steps there. So thank you very much for watching. Thank you very much for all the support on the channel. I look forward to seeing you in a future video.